Assalamu alaikum. Good afternoon. Today is day 15. We'll start the topic today. Before that, if anybody have question from the previous topic, they let me know. Today topic is the independent. The previous topic already covered. So today is another topic that we're gonna learn today, and it may continue next up to two session. But before that, if you have any question from the previous session, please let me know. Okay, let's start. Please quickly confirm I'm audible. Everything is fine. Guys, quickly. And I appreciate if you guys come on time so we can start the class also on time. And before starting, apology, the last session was cancelled at the last moment due to some personal reason. But we'll try to ensure things will be move as per the schedule. Today, our topic is the taxation basis. So taxation basis, here I already yellow highlighted the two things. One is the real estate relief and the small business relief. This will be the key content that we're going to cover in the topic. So the basis of taxation, taxable person in UAE. So this is our main topic today. So we're going to cover that. So in terms of the taxable person, what are the relief and what are the taxation on that and what are the benefits and what are the elections. So we're gonna dive in detail and we'll start on that. So first, the taxable person in UAE, we categorize in UAE city, they categorize in the resident and non-resident. Under resident, natural person and juridical person is the companies, LLC company, LLP company. So all the PJSA companies, so all will be juridical companies. So normally we familiar with the LLC, but LLP, limited liability partnership, PJSCs, so they are all the they are all fall under the juridical person. I appreciate during the class you asked the relevant question for the topic, and after the end of session you may ask the additional question here that you may have. So so the second part is the non-resident person. So resident person, we already knows if we are being a natural person, we live in the UAE. Being a natural person, we are living in UAE, so we may be familiar with that. But please mute your mic. Under resident person, natural person, we all familiar being a natural person. Juridical person, we already discussed. In non-resident person, so non-resident person, again, the natural person can be non-resident in tax, fall under UAE city, and juridical person, the foreign companies who's registered in the outside UAE in other territory, they also may fall under the corporate tax. So now the cabinet decision on the natural person 49. Under Cabinet Decision 49, they talk about the natural person relief. So this is the key area that will define for the real estate relief. This is the key area that will help us to understand the real estate relief. So there are many things because this due to this the Cabinet Decision 49. So once they release this decision, so many companies who own the property before under their company name, they started transfer under their personal name of the natural person name. So earlier the concept was the natural person just to manage their property. They said, okay, instead of owning their own name, just for ease of activity, they established the company. Then under that, they own all the properties. So the idea was that, okay, if I want to sell the property, I will sell the LLC company. So all the property will be transferred under that LLC company. On the other side, if the natural person transfer the properties from their own name to another, so there is a transfer duty. So there is a transfer duty in the UAE that while transferring the property, they have to pay to the government. Due to such arrangements, they are trying to avoid such duties. So they said, okay, let's make the LLC company and put all the property under LLC company. If want to sell the property, we transfer the LLC company. Maybe there is another reason. This is the one of the reason I'm just sharing. Okay, just for understanding purpose, there is no legal standing on that. To understand the concept, but once the corporate tax is launched and the ministerial decision, cabinet decision 49 is released, so then they realize that there are many benefits while the keeping the property under personal name. We're going to dive in the detail and we'll see the revenue in the calendar year up to 1 million. We will see what are this condition. Then the cabinet decision 85, ministerial decision 27 on the residency rule. We will see that also how it will be helpful. Even we are being a expat, we are as the employment, we are living in UAE. We also can claim the tax residency in case we want to claim some benefit in the home country. We also can apply the tax residency. There is some nominal fee, maybe the 600, 700, some small amount of fee, and you can apply. The condition is 183 days or 185 days you will have to be in the UAE. The cabinet decision 56 on Nexus, juridical person, non-resident person having immovable property in UAE, not their main business. Okay, so that also we're going to understand this. So these are the key topic that we will understand today, and hope try to cover all this topic today with some practice. So I divided this session in 4 or 5 parts. Here you can say the day 15 and part 1. Although this is the same topics, but in between this segregation for ease of understanding. So I just split this part 1, part 2 like that. So let's move to the start the topic. The corporate tax, the earlier also we seen city paid by taxable person on the taxable income according to tax period. So corporate tax paid by taxable person on taxable income according to tax period. Now the corporate tax under that we will see the taxable person and exempt person. We already go through that, but here again just to make this overview a summarized version from where we are starting this. I just added the same slide. The taxable person, under taxable person, there will be 2 categories, taxable person and the exempt person. We already learned the exempt person, and now today our topic is the taxable person, but let's see the taxable income. Okay, so under taxable income again will be taxable income and the exempt income. So now because I earlier mentioned, today topic is the taxable person. We're going to start from there. Okay, the taxable person. These points that you see in yellow, this is for reference purpose. So which topic we are discussing for understanding purpose. Taxable person, there is a 4 type of person. Taxable person, resident, 4 type of person. So now let's see what are the 4 type of person. Juridical person, we already discussed the juridical person in the previous session also. Juridical person in UAE, LLC, private limited, public joint stock companies, incorporated. LLP also we can add over here. So non-resident person incorporated in UAE. through PE like branch. See, so we said the incorporated juridical person, if incorporated in the UAE, they are resident. But here there is another scenario also. If the non-resident person, like the foreign company or the UK company, incorporated in UAE through PE, detailed concept, we'll have the detail one session on that, but today also we'll cover for understanding. So like the branch. So like the branch, one of the understanding, but this is branch, not only the PE, there is a many other conditions are also there. So here just for understanding, I mentioned the branch. Including the single person owned companies. Okay, there is a sometime we see the sole proprietors, single person LLCs. So they are also part of the juridical person. What is the second person? The juridical person incorporated outside UAE. Here the juridical person incorporated in UAE. Now the second person incorporated outside UAE. The third person is a natural person. The natural person, we will see the natural person, what are the relief and what are the income, what are the exemption. The fourth is any person by the minister. So these all the information we pull from the relevant cabinet decision, city law, and more, wherever possible, we are adding the ministerial decision reference, cabinet decision reference. Okay, so we are adding on that. So overall, this all from the what are the things that we're gonna cover? See in terms of the corporate tax, we have to see the city law, corporate tax law, ministerial decision, cabinet decision, FTA decision, tax procedure law. Okay, plus other the FTA guide also, but the FTA guides, they are not the legally, they are not inbound, they are not, there is no legal standing of the FTA guide, but again, the FTA, the authority who will go at a administrative body, they will go through all this, our returns. So there is some, for understanding purpose, are taking the concept, yes, we can rely on up to certain extent, but but the main reliance will be on the city law, ministerial decision, cabinet decision, and the FTA decision and the tax procedure law. So the tax procedure law, mostly people may be not aware the tax procedure law also exists. Yes, you can Google it, you will find it. Under the tax procedure law, you may go and see the criminal penalties, criminal administrative penalties, that also will be relevant over there. You may go through, but that is not available in the city law or the cabinet decision. So that also will be helpful for you guys to understand. Anyhow, let's come back to the topic. So taxable person, we said the resident and non-resident. We will discuss the both, but let's start with the resident. In terms of the resident, again, we are starting from the juridical person, and let's see the next part under the juridical person, what are the person are coming. So juridical person incorporated in UAE example is LLC, private limited company, public joint. Okay, this. So now here the concept we mostly we are familiar with that is separate legal entity. Separate legal entity. The concept of the separate legal entity. Separate legal entity, just for our understanding purpose, if the company own the liability towards the customers, towards the suppliers, or towards the business stakeholders, so they as per the memorandum of article or memorandum of association, they already define the share capital. So their liability is up to the share capital, paid up share capital. The owner is not liable for the company any kind of the loss and the third party payment. They are liable up to the amount of the share capital that must be the paid up. Here the share capital, I'll just as a point, the compliance purpose, the commercial purpose. If you seen the bank document or the any other multinational company at the footer here, they normally mention the paid up share capital. Here they are mentioning the paid up share capital. Why they are mentioning? Because they are saying if the document that you are giving to the business stakeholders mean the suppliers, customers, or any stakeholders whom you are working. So if you do not mention this your paid up share capital, then you are liable. You may liable for the liability of that stakeholder also, because they said you have to notify the contract you making on the commercial contract with any business partner. on the letterhead, normally we use the letterhead for the contract. On that, you have to mention the paid up share capital amount. This is the one of the company law. Company law, mostly people are not familiar, but this is just for understanding, because that defines the separate legal entity. They're saying, yes, this is the legal entity and this is the his liability up to this amount. Normally, we may be familiar the stamp papers in the home country and here also maybe. The stamp paper, they say in the 10,000, 5,000, 20,000, on the stamp paper itself they are writing. So the 20,000, the defining the value of that contract, what is the value of that stamp paper? So up to that amount, maybe they are liable to in case of any complaint or in case of any legal case. So here again, the concept I'm just sharing as additional part. So normally the juridical person are separate legal entity. What is separate from the owners? Because the legal means we cannot see any person, but in the eyes of the law, as per the company law, they already legal person is established. So they have a separate legal personality from the owners. They have own rights, own liabilities, and they will give some rights and the obligation to the board of directors or the managers of the company. So here, another important part we have to understand, if the company is already incorporated in the UAE, so then we will ignore where they effectively manage and control point if incorporated in UAE. So this is another concept, they effectively manage and control. Even we will see in the next slide, we will see this one also poem. So now what we're saying, that if company is already incorporated, we do not have to look into the poem. So this is incorporated. What is anything? The poem, the effective control and the management and the control maybe in UAE or maybe outside UAE, both are ignored. So we are considering as a juridical person. Control inside UAE or outside UAE automatically is resident person as long as the juridical person incorporated in UAE. So taxable income. So now this juridical person subject to UAE city on the worldwide income. So their income, taxable income is the worldwide income will be taxable. Taxable income, worldwide, UAE income, foreign income. So both will be fall under the UAE city law. Now the second category, we're gonna see that the juridical person incorporated outside UAE. Outside UAE, so what are the main, the first point coming, the company is not registered in the UAE. Setup company is in the low tax jurisdiction outside UAE, but live in the UAE, not incorporated in the UAE. Mostly people are maybe familiar, the people, because in Saudi, there are many regulation or many compliances. So the Bahrain is the connecting through the bridge with the Saudi Arabia, and mostly people, they consulting services they providing, they are registering the companies in the Bahrain, and they are operating in the Saudi. They have some certain arrangement, and through that they are working. So if they are operating in the Saudi, so they also subject to the corporate tax under certain conditions. This is just for understanding. I highlighted this point, but let's say we will take the example. We take the example because even the Saudi, there is the corporate tax is 20% for the expat. Okay, so in the Bahrain, maybe that corporate tax earlier was not there. Maybe now is the corporate tax in Bahrain also will be there. Let's assume that. What is the objective over here? What is the objective over here? If I'm just mentioning the Bahrain and here is the UAE. Here is the UAE. If company is registered here, they are doing the business also in Bahrain also. Okay, but the ownership, the board of directors are the management of the company. live in UAE. The strategic decision are taken in the UAE. Let's assume that in the UAE, the corporate tax is 9%. That we already knows, but let's assume here is the corporate tax is 0% or 5%. Let's take this for understanding. So what they did, the low tax jurisdiction, even we can consider the Bahrain or the any other country from the African side or any country where the tax is lower. The setup company is low tax jurisdiction outside UAE, but live in the UAE, not in covered. So now they are set up the company outside, but they are living here. They're taking all the management decision making, all they are managing from the UAE. So this is what they're saying. If this is the case, then they effectively manage and control in the UAE, that is the poem. So it will be subject to UAE city law. If the company's management decision making are inside UAE, so it may fall. Again, the word I'm using, it may fall under UAE city. How it will fall? What is the strategic decision they are taking? The poem here, the place of effective control and management. By paper, substance over form, the concept of substance over form, if you can see that company by paper is an outside UAE, but they operating from the UAE. Strategic decision, long-term decision, board of director meeting, and not equal to day-to-day operation. There is difference. Okay. So we are discussing the board of director meeting. So they are automatically resident as long as they have poem in UAE. They may fall under UAE city. The word I'm saying, the may fall under UAE city, may fall. So what is the reason, or what are the possibility? I'm using the word may. Anybody would like to answer on that if he knows? Anybody would like to answer on that? Guys, quickly. Okay, I'm gonna continue. Here the concept is that the DTA, double tax treaty, or the double tax, the both words are using double tax agreement, but mostly double tax treaty between the other countries. If the DTA is saying, if the DTA here, the automatically resident, check the DTA resolve this issue. What do you think? This DTA or double tax treaty, they will resolve this issue. Whatever the DTA double tax treaty is mentioning, that will supersede the UAE city law. If DTA is saying this company or this juridical person is resident in the Bahrain or in the other part of the world, so then he will not fall under the UAE city. If DTA is not available, then you may fall under the UAE city. You have to register in the UAE also, and subject to the UAE taxation. Okay, then next is the natural person. Here we said the 4 person, the resident person are the 4. First, the juridical persons incorporated in UAE. Second, juridical person incorporated outside UAE. The third is the natural person. So natural person, this is the very important understanding, and we have to grip the concept. We have to follow, keep following this ministerial decision 27. What the difference over here? Many people are may make mistake over here, and still the market, there are many people are working in different capacity. They still confused over here. They have different understanding. They are not aligning the concept or aligning the taxation on this matter. How they are not meeting? Here, the word is natural person. The natural person doing business in UAE via trade lessons. The word via trade lessons have it may change whole concept. It may change the whole concept of city application. So if the natural person doing business in UAE, okay, so the ministerial decision 27 will be applied, and they're saying via trade lessons, we have to see what the mean of via trade lessons. Via their activity they are doing, they require that trade lessons. Activity they are performing, they require trade lessons. Even they do not take the trade lessons from the relevant authority, but the activity of the business, here the word business, doing business. If he's performing any business, that business fall under the company law, and where they need to have the trade lessons, even they do not have. So here will be he subject to the company law, the non-compliance. What the non-compliance? Because whenever the authorities, they will notice, they will charge the penalty on that. Because if they are doing non-compliance, they are operating, or they're doing the business in UAE without trade license. This is one of the requirement as per the company law. Okay, the second, the compliance, he is liable to city. He is liable to city. Even he is not registered over here, but still he is liable to city. So if he's ignoring the both, so he have the non-compliance and the both side. He may get fined from here also, and he may get fined from here also. So normally when we discuss this part, we were saying how the person will register, even he do not have the trade lessons. Yes, it will be go the compliance from the beginning. They are pushing towards the beginning. You have to do all the compliance, because when you go to the FTA, so you have to provide all the supporting document. Here we discuss required trade lessons. He do not have, but let's see, he on the other scenario, he have the here that is bear with me. Okay, here other side already have the trade lessons. This is the next. If he already have the trade lessons. So here we seen that natural person doing business in UAE via trade lessons, he required trade lessons, or he already have the trade lessons. So this is the important part we have to understand. Let's see why this is important, because the tax regulation will be changed. Your benefit will be changed. Your compliances will be changed. Now here we seen doing in UAE via trade lessons. Here we think earning in the personal capacity. Now this natural person remain natural, and the personal capacity is the natural. So what now we will understand what is the personal capacity. The business we already understand, if he have the trade lessons, or he doing some activity where he need the trade lessons. But ministerial decision, cabinet decision 49, he given certain activity that we can perform. Where we do not need to be registered for the UECT, and they are aligned with the company law also. They are aligned with the company law also. Okay. So what are these reasons? Here, this yellow highlighted, please keep in mind, this is the very important part. This, even you want to verify, you go to cabinet decision 49 and see they mention over there. Now the natural person earning the income, here the word doing the business, or we can say the earning business income. Here we might mention earning business income, and here we're saying earning income in personal capacity, earning income in business capacity. Okay, now we will understand the exception. Now we'll understand the exception or the impact. What are the impact that make the change? The first exception, what are the exception? What are the benefit? The exception is the natural person relief. If you're doing the business via trade lessons, or you already have the trade license or required trade license, this exception will be applied. What is this exception? Natural person relief. Natural person relief. Natural person relief is available to both. Natural person relief is available to both resident and the non-resident. So now this is also important part. You guys note down the point where I'm saying the natural person relief available both resident and non-resident. Second, if the revenue is less than or equal to 1 million. Here the word is less than or equal to 1 million. Sometimes I'm getting the question, okay, is equal to 1 million or less than 1 million only? No. If you have 1 million or less than 1 million in a calendar year for natural person, the Gregorian calendar year, that is January to December. If your revenue under the natural person, you are doing the business through the trade license and your revenue is less than 1 million. Now this 1 million, again, we will discuss this 1 million also. This 1 million from only one business, maybe this natural person have the 10 business, maybe he have 10 business, 10 sole establishment, okay, he have 10 sole establishment. So this means all the 10 business altogether income revenue must be less than 1 million in a Gregorian calendar year. So keep focus this point, all the 10 business, not only one business, because natural person is stand alone under his natural capacity. He's doing the business, but even he have multiple sole establishment trade license. Even we familiar that under VAT we are registering as a one taxable person. Again, in the corporate tax also we are registering one taxable person. Then no corporate tax registration applicable, no corporate tax return, no city payment. And there is a no deadline. As of now, there is a no deadline. No deadline means for the future, without indefinite time period, you have this benefit. In future, they may change. That there's a different. Here I mentioned no deadline like the small business relief. Small business relief, the deadline 31st December 2026. This is for the small business relief deadline, but in natural person relief, there is a no deadline. Okay, now the next part, the next exception 2. What is the exception 2? Here the exception 1 under the natural under the business, exception 2 under personal capacity without trade license. What is the ministerial lesson is saying? Exception income below 3 income are out of scope. Below 3 income are out of scope. Now here the important part, even revenue is more than 1 million or less than 1 million. No city registration is applicable. No city registration is applicable. So which means if you have the billions of income, if you have the billion of income, you are out of scope. You are out of scope. Okay. Here the business income falling under relief, and here is the out of scope. The definition, the city is not applicable on that. What are these out of scope? What are these out of scope? Wages and salary, if he's doing the employment anywhere. So if you are getting the wages and salary, this is out of scope. Now here the real estate. Today, what I highlighted, the real estate income. The real estate income falling here. If the real estate income under his personal capacity, property is under his personal name, so whatever income is coming from the real rental or the sales, all the out of scope. Maybe the billions, trillions income he's generating through the rental or the sales of the property, buy and sale of the property. So all are out of scope. There is a no revenue threshold. There is a no revenue threshold. No 1 million, no 3 million, no 50 million, no 375,000. There is no condition on that. Without any condition, these income are out of scope. Next part is the personal investment income. Personal investment, if you buy the shares in personal capacity, again, the word personal investment, the word personal is important. The personal in personal capacity, he might buy the share as a personal capacity or his business, where he doing the activity via trade license, his business buy the shares. In business capacity, he might buy the share, it will fall over here. If his personal capacity investment, shares, security, bonds, spooks, any kind of the investment he's making, this is also out of scope. This is also out of scope. Whatever the income he's generating is exempt. There is no PI, there is no exemption criteria. Now do you understand the difference between the out of scope and the exempt? We are not discussing the exempt. When we are discussing the exemption, we have the other conditions. Here, the basic definition, if you are doing in personal capacity, so ministerial decision is mentioning that this is the out of scope. Guys, you understand this point? I very briefly highlighted this. As here we already mentioned the resident or non-resident, the both previously we discussed that here. But again, this topic will be continued. You will understand here the non-resident person also can take the benefit. Non-resident person also can take the benefit. We already mentioned the natural person relief is resident and non-resident also. Somewhere we mentioned over that, but we'll see. Okay, now let's see the our third exception. How many exception we seen? We seen two exception. First, second. Okay, these exception under natural person relief. Here we are seeing the three exception. Third exception, natural person business income. Now here the business income. Let's see the business income. Business income up to 1 million revenue. If revenue is more than 1 million, less than 3 million. Personal investment. Okay. Third exception, we're going to see that the business income, if the revenue is up to 1 million, what will be the criteria? If revenue is 1 to 3 million, what will be the benefits? And personal investment, what will be the benefits? So let's see. Now business income through or required. Here the word through or were required via trade license. You are generating the business income via trade license, or you already have, or you require. Okay, so here the concept is that in business capacity, we are not discussing the personal capacity, because whatever the definition in business capacity means, he already have the trade license. This is the critical topic, and there is another, many things will be coming on, and later on we will summarize all the things. Now the revenue condition under business and the relief. What are the revenue condition? Up to 1 million, all business income in a calendar year, Gregorian calendar year, okay, January to December, Jan to December. Natural person relief is available. Okay, if your income is up to 1 million, what is the up to 1 million natural person relief is available? Okay, so natural person, what are the benefits under the natural person relief? No citizenship, no city return, no city payment, no deadline. We already seen the previous slide also. Non-resident. Okay, so now the let's see the another part of that exception. Okay, exception. Now what is the exception? While calculating this 1 million, what are the income we have to include? Whatever the income we have to add, what are the income we have to minus? Because this revenue threshold, how we will calculate? Because there is some income we have to add, some income we have to minus. So there is certain income. So what are the income? Because if you calculate all the income, maybe you have the 5 million. But if you apply, you cannot apply the you cannot apply the natural person relief. But here we're going to learn that what will be included in the revenue threshold. What will be included in the revenue threshold. Okay, now here the exception up to or less than 1 million revenue calculation or business with below consideration. Excluding personal capacity. Excluding the personal capacity. What are the personal capacity? We understand already, but here just giving you the understanding: wages and salaries, rental income, personal investment income, shares and security under personal capacity. I am already highlighting the personal capacity for better understanding. The second, including exempt income, including the exempt income. Yes, to calculate under the here the natural person relief. This is the to calculate the natural person relief in exempt income. What is the exempt income? Exempt income means your business buy the shares and security. Your business buy the shares and security in another company. Here the exempt income, if your business buy the shares and security as a business capacity under business name by a natural person. Again, the word the natural person, but through business. This is the business where you have the trade license. So now this will not be out of scope. Here you see it is out of scope. This is the out of scope and this is the exempt. Well, you understand the difference. You understand the difference. One side is the personal investment is the out of scope is in under the personal capacity, but the same kind of activity if you are doing through the business or via trade license, it will be exempt. What is the exempt? That we already learned in the previous topic, PI. Okay. So what is the PI? That we will not discuss here, that we already understand what are the exempt incomes. So here the income will be exempt subject to applicable condition. Okay. To calculate the revenue threshold of 1 million, yes, this will be plus. This will be plus, but this will be minus. We will add in the revenue threshold. And this will be minus. Example and point for understanding: CT always on the profit. CT always on profit. Profit means income minus expenses. Just for understanding, CT always we are paying on the profit, not on the income. Income here, we calculating the income only for the natural person relief purpose. Here the revenue threshold to get the relief, not for taxable income. This is the point over highlighting. City corporate tax always they calculate on the profit, not on the income. Here we are calculating the revenue threshold to validate, to check the natural person relief. Okay, so now then here if you guys, if you want to here the cabinet decision 49. Cabinet decision 49. I copy from there. Read this class, then I'll read this. Why I'm saying this is the important class, guys, please read this class. Cabinet decision 49, natural person, real estate investment, any investment activity conducted by the natural person related to directly or indirectly the sale, lease, sublease, and renting of land or real estate property in the state is UAE, that is not conducted, here the yellow highlighted, not conducted or does not require to be conducted through a trade license from a licensing authority. Guys, you understand what is the ministerial cabinet decision 49 and what are he mentioning? This is the point that we already discussed, and this have the major impact and the major benefit the people transfer the property from the companies to the under their personal name to take the advantage. Although this is fall under the GAR rule and tax anti-avoidance. but still people are doing that also. And they already did when the cabinet decision 49 is came. And some people, they are not familiar, they were sleeping. Now they are getting this information, and now they are looking at what to do with that also. So what they mean, before, from last 1 year, mostly the companies are approaching to the different industries, or the different investor, different businessmen, do the impact assessment, corporate tax impact assessment. So this is the advantage, or this is the benefit of the impact assessment. If you know the information from the beginning of your tax period, or before the tax period, because so then you can take the corrective measures or corrective action, or the necessary action. Necessary action will be more appropriate. You can take the necessary action, what if is applicable, that where you can optimize your tax liability. Now the second part, personal investment. Here the personal investment, again the same concept. Investment activity that a natural person conduct for their personal account, and that is neither conducted, they're saying neither conducted through a trade license, or not require the trade license from the licensing authority in this state, are considered as a commercial business. What is saying? They do not conduct through trade license, not require trade license, are not considered as a commercial business in the accordance with the federal degree law of the 50. Now, hope you understand the difference, what we learned today, and what this is the critical and the important part for the today learning. Our whole next topic also will be on this understanding. Then you will understand what are the benefits that you can avail under the personal capacity as a natural person. Okay, now you guys may search on the cabinet decision. You write the Ministry of Finance website. You can search this and share in the group also. The people can go through, and if they want to understand, we covered all the points from the cabinet decision. Anyhow, now here I added another ministerial decision, small business relief. We will come onto that also. Let's cover the now here we've seen the revenue up to 1 million. We already discussed that. What are the plus and minus? Here the revenue 1 to 3 million. So in the tax period, now the small business relief. Now this is small business relief. So this is the small business relief. If you guys want, you can search and go through that, but we are covering the part from the same. Ministerial Decision 73, Article 2. Resident person. Small business relief is only available to resident, but natural person relief available to resident and non-resident. One of the participants asked this question. So here, natural person relief is resident and non-resident, and here the resident person, small business relief is not available to non-resident for the tax period. Okay. So what is the tax period? We will go through. Okay, the juridical person. Again, this is the juridical person. City registration is required. Yes, it is required. Even you are not gonna pay the city. City return, yes. City payment, no. And it is available up to 31st December 2026. Small business relief. This is under small business relief. Would we have to register for the city? Under the natural person relief, we will not register for the city. If we not register, there is no return, no payment, no deadline. If here the small business relief, we as a juridical person, yes, we have to register with them. Okay. Now the natural person also who's doing the business, the natural person who's doing the business via trade license. Okay, via trade license. So he can also avail the small business relief. Here, if revenue is more than 1 million, if revenue is more than 1 million, he can fall over natural person relief. Sorry, the small business relief. Small business relief also available to natural person and juridical person, but this is for resident only, for not non-resident. Any point that you guys wish to ask, or any question that you wish to ask? Guys, please let me know. Guys, quickly, please let me know. Any point that where you need the understanding? See, the VAT regulation are different. VAT regulation are different, and corporate tax regulation are different. Mr. Qasim is asking the without trade license, but yes, without trade license, you register for the VAT purpose. You are complying the VAT regulation. You are doing very good. Continue with that. Now we are understanding the city regulation. What are the city regulation that we learned? So please follow on that. So I hope you understand the difference. VAT have own regulations. Even you are paying the VAT, if whatever you're doing, keep continue as per the VAT. But under the city, please follow the city regulation that we already discussed in very detail and very comprehensive way. And this is a very summarized understanding. If you guys may study further the relevant article or the relevant ministerial decision. Here we have to understand the next part. I'm just gonna take you the back previous slide. Okay, now the natural person. We already discussed the natural person, couple of points. Now let's exception we already discussed. Just for understanding purpose, now the Mr. Qasim, your question may be answered in the next slide also for better understanding. Type of business or business vehicle. Okay, this is again the natural person. We are understanding the types of business or business vehicle. Let's see what are the types. Okay, so natural person doing the business in UAE through unincorporated businesses. What are the unincorporated businesses? So this is the another leg of the same understanding. You guys keep focus on that. In last session, one of the candidate was asking the unincorporated partnership. I'm not sure the which participant was requesting this information. So let's see the unincorporated partnership type of business or business vehicle. What is the business vehicle? The definition of the vehicle, we normally everybody have the different kind of vehicle we are using for the office transportation. So what are the vehicle we are using? Some saloon cars, some the station cars, okay, and some they're using the bike, some using the public transport. They are all the vehicle, but are the objective is to travel. What are the objective is to travel. So everybody there have own priorities, their own requirement, their own objective, own budget. So they are accordingly they are choosing the business vehicle. So this is the answer why the people establish the sole establishment, why the people doing natural person, why they are doing through LLC. So this is the understanding purpose. Now unincorporated business, sole proprietorship, and unincorporated partnership UIP. Sole proprietorship where you have the one person owner or one person partner. Here the one person. if you are open the sole, take the trade license, and if you are single owner or single partner 100% own, then they will say sole proprietorship. But if you are minimum 2 or more, then they will say they will not mention the sole proprietor or sole establishment. Okay, so 2 or more than 2, then you will fall under the unincorporated partnership. Along with trade license, the word will not be appearing. So here the concept is that here the one person is liable for the corporate tax himself, okay, because he's on the this business, this license. Again, here the difference here, the unincorporated business can be established in a two-way. Before that, I'll just explain in a two-way. What are these two-way? What are these two-way? Previous understanding will remain valid. You have to apply that also, but here understand that, okay? Just now, one of the participants has said they are doing the business without trade license under the natural person. Just take this example. I would appreciate if just given more information whether they are doing the property business, real estate business. So I'll incorporate the same point over here for our understanding purpose. Mr. Qasim was mentioned that. So Mr. Qasim, you are referring to the real estate business, real estate activity. Music business, so that is a different industry. Okay, that maybe they already knows is applicable or not applicable. They already go through that applicable requirement of the company law. So they you also have to check. Maybe this activity is fall under the commercial activity. You're not registered. You're doing the business, but you're gonna check that with the relevant authorities. Maybe you are subject to the trade license registration, and if you are subject to trade license, then you are under the corporate tax also. You have to register for the corporate tax also. So please take care on that part also. Anyhow, here we are saying if you are doing some business, okay, like the natural person is owning the property with under their own name without trade license, okay, so there is no registration is required. Okay, now here the same activity on what is the point I'm going to explain you this point. Unincorporated businesses, unincorporated partnership may be established by agreement. The same real estate property, I'm taking the example of the real estate property. If this is established by agreement, what is the agreement? We already seen the real estate property, real estate coming the rental as well as the sale purchase also. Here the two person, Mr. A and Mr. B, they come together. They come together and they said, okay, let's invest in the property. Who will own the both 50% as per their share capital or the whatever they agreed, and they own the property under their own name. Okay, so they made one agreement and they said, okay, under this agreement we are the partnership, and under this agreement we are the partners. Here I'm not using the word any trade license. Just focus on that. I'm saying A and B, they made the agreement and they become the partner, and what they did, they buy the property. So this agreement will say, okay, I put the 60% and the second partner put the 40%, and now we own the property jointly. And what are the jointly? This is their partnership sharing ratio. So as long as real estate property you are giving on rent, you are earning the rental income, this is the out of scope. You understand the point? Here, the unincorporated partnership, the definition by agreement or via trade license. If the trade license, then this out of scope will not be applied. This definition will be changed. So here you have to understand if the agreement, some activity that you are doing, they were not require the trade license, or you need also do not have the trade license. Here the another part, if you trade license is not required, but you already have the trade license, you are subject to city. You are subject to city. Guys, you are catching this point. You're catching this point. If you do not have the trade license or you do not require to have the trade license, the both condition you have to look into that. Okay, now hope this point is clear. If unincorporated partnership, if you are doing via trade license, let's say the most example is via trade license, other point you already understand, you may apply to the FTA, become the OPAC, taxable person. Why? Because if you doing the business via trade license, yes, the UIP is subject to city registration. But the partner or the owner, they are the liable for the city return and the city payment. Guys, you catch this point. I'm saying the unincorporated partnership, if you already have it via trade license, unincorporated partnership, what is the unincorporated partnership? If you take that sole establishment license, if one person, this is the unincorporated partnership. If two person, this is also part of the unincorporated partnership. These are the two category of that. Both are under unincorporated partnership. Here the one person, here the two person. Here the one person standalone is taxable. Okay, standalone is a taxable. So here the two person and they are come together and they will say, okay, this person is a taxable. They will give the application to the FTA. Okay, just treat this unincorporated partnership as a taxable. Then what will happen? This person, this business will be liable, is already registered for this city. Then he will proceed further. If the application is approved, you will submit the city return. You will pay the city tax also. Guys, understand the difference quickly. Please confirm quickly. You understand the difference so far? Understanding is clear. Okay, now the next part is the incorporated businesses. Incorporated business, we already understand LLC, LLP. This is the public joint stock company. Okay, they are liable for the city. Actually, this is here. What do they think? Unincorporated business, transparent, look-through effect. What is the look-through effect? What is the look-through effect? Look-through effect means if the transparent glass, if you can see other side of the glass. The glass is there, but it do not have the standing. It is not blocking your view. This is mean the transparent look-through effect, because this UIP do not have any legal standing. Who own this business, he will be liable for the city if you did not make the application to the FTA. Who is that? The partners. The partners, they are liable in their, here I'm gonna use the word in business hand and in the partner hand. Now the income will be subject to tax in the partner hand. The partnership topic is also, I think, third or fourth topic will be partnership, that we will understand this partnership. This may take one full session, maybe up to 3 hours to cover that. So now this is the partnership, now this registration is there, but they are liable. Business do not pay tax. This is a look-through effect. Business do not pay the tax. Who will pay the tax? Owner, sole proprietor, partner will pay. Apply to FTA. What is the, you have to make the application to become the OPAC. Treat the partnership business as a taxable person. You submit the application and then you will see that. Here, we will understand this less than 1 million or more than 1 million also. Because here, if you, what is the less, I'll give you the understanding. If there is a two partner, earlier we mentioned the, this, although this is the one of the standalone topic, but let's give me the understanding. A and B. Let's say this business, this partnership business is having the 1.2 million, 2 million income. So they are, this 1.2 million, they are subject to natural person relief or no? They are subject to natural person relief or no? Quickly, guys. If you have the this unincorporated partnership revenue is 1.2 million, they are subject to the natural person relief or no? Guys, quickly respond on that. Guys, quickly. So now here the tax strategies, tax optimization, what we are saying, what the tax consultant or the business service provider, what they are doing, or what being a professional, but being a professional, what we have to do. If you make the application to OPAC, if you make the application to OPAC, then no natural person relief, no natural person relief. Natural person relief, because now this business is subject to tax. But now this income subject to tax in the hand of business, in the hand of business. Now this is the analytic point of view. What is the beneficial for you that you will do, that you will do. But if you do not make the OPAC, let's say if we do not make the application for OPAC, apply to FTA become, okay. But here we are saying we did not apply to FTA. We did not apply. So now what will happen? So this 1 million will be split between these two. Let's assume that, just for understanding, 600 and 600. Now this is less than 1 million. This is subject to tax. This is subject to natural person relief or no? Even natural person doing business via trade license, but is less than 1 million, he can avail the benefit of natural person relief. So this is the rationale, this is the understanding that you guys have to do that. This may differ on each business to business or each scenario to scenario. There is no hard and fast rule. You will go with OPAC or you go without OPAC. But this business income, the previous Hasib, I think the Hasib was asked this question. So now this is the natural person, this partner in the uncovered partnership, they will subject to tax in the hand of partner, in the hand of the natural person. But here you are looking for standalone is a 600. Maybe he have another 4 or 5 business. So you have to plus this his other business. Maybe he have 200 from other business. Maybe he's doing another business. Maybe he have 150 from other business. For B, you will calculate in this way, and for also A also in the same way. Then you will see whether this is you are able to take the natural person relief or no. We have the summarized list where we will see the benefits, our analytical point of view. Guys, yes, this point also I believe is covered. including exempt income, so that we are already seeing the exempt income on the business. Juridical person is subject to city, they will pay to the tax. And what are the benefits? So natural person relief is not available. Natural person relief is not available. Now the second, one more important part, the family foundation. The family foundation, I'm just giving you understanding what is the family foundation. Normally juridical person, 99%, they established by the contract. What is the family foundation? Normally the concept of the family foundation, I'll give you, earlier I give you one point where the people are keeping the property under the business instead of personal name. What are the reasons? I give you one of the reason, maybe that is fit, not fit. Here I'm giving you another reason. See, all this information are for understanding purpose, guys. If you gonna apply on your activity, your company or your client, please do the needful analysis and then apply on your business. Okay, because each business have the different scenario that may differ on each business to business, but here my objective to give you the concept, give you the learning, give you the relevant information of the article. Further you go study and apply on that article. Family foundation is normally a juridical person, but some jurisdiction, maybe the DIFC or other fees on there, you can establish through the agreement also. Again, the definition is the same, agreement. Okay, but normally we are considering the juridical person. This is the juridical person. Here the juridical person, the same concept where we saying we're gonna apply for the FTA to be opaque. Okay, so here they're saying family foundation may apply to FTA to be treated as a unincorporated partnership. By default, they are subject to CT. By default, they are subject to CT. By default, they are juridical person. But the family foundation, they can give the application to be treated as a unincorporated business. Normally without trade license for any business activity, because this juridical person, the point I'm going to give you the understanding. Okay, in UAE, the Sharia law is there. You know the Sharia law, Islamic law. Based on Islamic Sharia law, if in case any expat is died in UAE, so let's say mostly people have the bank account. One of the common example, plus any property. Now people are investing in the property also. This is just additional information for understanding point of view, because if you know the concept, then you're gonna come forward and apply the things. The bank account, if the expat, he have the 1 million bank balance and the 10 million property, so total is 11 million. If he died and now all the things under his name, so can the dependent, who's dependent? Only the wife. Here in UAE, mostly the living with wife and the kids. So this property, it will be come directly to them or no? Once the authorities will come to know, this bank account will be seized. Once the authority will know this bank account will be seized, nobody can withdraw the funds. Now through the court, this property or this bank balance will be, as per Sharia law, will be transferred to their beneficiaries. So what is the Sharia law? As per Muslim, maybe people are familiar, but even the non-Muslim, they're saying this is law of land, it will be applied on all of them. The non-Muslim, they don't want to, they want to avoid this. They want to avoid this Sharia law. So what they do, they make the family foundation. They keep all their wealth under the family foundation. All the wealth and the property under family foundation. So here is the one, the settler, the person who own the property, and the trustee under the who manage. What is the trustee? The role? Identify. Anyhow, we'll discuss in the family foundation. But let's see the only. He will collect all the property under family foundation. What the role of that? They will collect the money. They will invest the money. They will distribute the profit to the beneficiaries, whatever they define in the family foundation. Now, is there any activity defined in the family foundation? No. His objective is only to take the investment, reinvest the funds, and once the funds are coming to distribute to the beneficiaries. I'll give you another example. If the people mostly in the Asian country, what they do for the kids, they say, okay, my kids are, if the person is have some health issue or any other reason, he make the family foundation. He said, okay, I'm giving you this monthly basis X amount. So these are my 5 kids. So you have to ensure their study. I'm giving you this amount. You're gonna reinvest. They will reach at the age of college, university. You have to invest them. You have to take them to the relevant universities and spend all the money for their study. Or maybe for the marriage, if for the daughter, they say, okay, this is my daughter. After the certain age, then will in the reach the age of marriage, you have to marry of the arrange the marriage expenses through this investment. So this is the general understanding, but we will discuss in the family foundation. Hope that you take the idea of the family foundation also. Okay, now again, we are continuing the same topic. I just split the same topic due to the housekeeping purpose. Just be with me.